Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us here again at AusBiz. So let's take a look at what happened overnight. The feature key, of course, that decision from the Fed this morning, leaving rates on hold in the 4.25% to 4.5% range, but indicated that interest rates would fall by another 50 basis points by the end of the year. However, Fed Chair Jerome Powell says the Trump administration's policies present an economic outlook where uncertainty is unusually elevated.
While there have been recent developments in some of these areas, especially trade policy, uncertainty around the changes and their effects on the economic outlook is high. As we parse the incoming information, we're focused on separating the signal from the noise as the outlook evolves.
Well, given the widespread imposition of tariffs, the Fed has marked up its outlook for inflation this year to 2.7% compared with the 2.5% pace anticipated in December.
It is going to be very difficult to have a precise assessment of how much of inflation is coming from tariffs and from other, and that's already the case. You may have seen that goods inflation moved up pretty significantly in the first 2 months of the year. Trying to track that back to actual tariff increases, given what was tariffed and what was not, very, very challenging. So some of it, the answer is clearly some of it. A good part of it is coming from tariffs.
Fed officials marked down their forecast for growth this year, with Jerome Powell adding that the odds of a recession have increased, but are not high. Following his comments, US interest rate futures priced in a cut of just over half a percentage point this year, in line with the Fed's median projections, with traders seeing a 62% chance of a cut at the Fed's June meeting. Well, US Treasury yields fell in response to the Fed's outlook, with the yield on the 10-year note down around 3 basis points to 4.25%, the 2-year down some 6 basis points to 3.98. And the US dollar paired gains against the euro after the Fed's decision, the Aussie trading at 63.6 US cents. Well, US stocks rallied after the Fed kept rates unchanged, as widely expected. Stocks extended gains further as Fed Chair Jerome Powell spoke, saying it's difficult to assess how much of any price increases are attributable to tariffs. The big banks rose, along with the Mag 7, and Tesla was one of the biggest gainers there among the Mag 7, while the volatility index fell below the 20 level for the first time in almost a month. And Boeing shares soared after the aircraft maker said it does not see a near-term impact from tariffs. Oil prices edged higher after the US government data saw a drawdown in fuel inventories, but the Fed's decision to hold rates steady capped those gains. Brent crude futures just shy of $71 a barrel, copper some 2% higher, iron ore falling more than 1.5% to $100 a tonne. And gold has jumped to another all-time high, with spot gold up 0.5% at $3,047 an ounce off the back of the Fed decision, and after Russia and Ukraine accused each other of violating a new agreement to refrain from attacks on energy targets. So let's unpack it all. Ira Epstein joining us from Linn and Associates. Ira, welcome back. Good to see you. So what did you make of what we heard from Jerome Powell? Clearly that word uncertainty, and that has been spooking markets, of course.
Well, I think the pivot is what's important. You know, in the past, we were looking for inflation to come down for the Fed to cut interest rates. With today's meeting, I think the Fed pivoted. And the Fed is now saying inflation's going up, the U.S. economy is going to see slower growth, the Fed has your back. Having your back means it's prepared to lower interest rates if things get too weak in the U.S. economy. And I think so many analysts missed out on just what was said, and that is what I think the Fed chair said.
Ira, higher inflation, lower economic growth. Is stagflation a possibility?
Well, I think we're in it. That's the first thing. And I've been saying that. One of the things you and I have been talking about for the several weeks now is gold. I've told you I thought it was going up. You know, here you are at all-time highs. And today it's up again tonight. In fact, it's up $17 an ounce in the U.S. at $30.59. So you are looking at a market that is just saying, hey, even the Fed thinks inflation is here, and away we go. You'll get breaks along the way, but this play is just going and going and going, and you have to understand what it's about. I don't trust the stock market rally. Remember what the Fed said: higher inflation, slower growth. And you want to buy stocks on that? I don't think so. I think that you want to trim your portfolio and know what you want to own and how you want to own it.
All right, so potential more falls to come then in your view. What are we seeing from Donald Trump? Clearly he's perhaps not looking at at what's going on in the stock market, or maybe he is, but he's not letting on. Would that be of concern? Are we likely to see any back down in terms of tariffs, do you think?
No, that's the first thing. No back down. Number two, he is looking at the market. Remember, he talked to the U.S. public and he said, you're going to feel some pain to get to where we have to be. And he's made that very clear. He realizes he's fired people in the U.S. Those people have been put on. My own daughter-in-law is one of the people that got fired at one of the departments. And today she was notified she's been hired back by that court order with all her back pay. So that just gives you an idea of how radical some of these things are. People get off, they get back on. So many people moved away. It goes back and forth. But what the president has done is he has switched gears, and we talked about that. He is concentrating on taking inflation overall down, not up. We all know that the first thing that happens is in stages with tariffs. The first impact is typically inflationary. The second impact isn't. And the reason is that you have more people that go to work, factories get built in the areas that you have to, or whatever you're growing, whatever you're protecting with tariffs gets done. So the question is, and none of us know it, including the Fed, will the tariffs get in place? As a group, they're going to come on country by country, and everybody has a chance to negotiate with the United States from the Trump plan. It is not going to be blanket they're on and blanket they're off. Not going to happen. Australia is in great shape. So is New Zealand. I think you have overall about 1.5% tariff on the United States if you look at everything that you have. I don't think New Zealand has any. So there's nothing to reciprocate, so to speak. So I think your country does fine on it.
Ira, you talk about that chaos, particularly that battle between the executive and the judiciary. Is that likely to increase? And I guess adding to the overall sense of uncertainty there, and that's going to be weighing particularly on corporations as they look to make decisions.
The answer is it's going to continue through this presidency. There is no difference. The Democrats are going to attack Trump over and over. There's over 100 law cases in front of the courts. This latest one, where the battle goes with firing now the FTC, two people in the FTC. That's going to go all the way up probably to the Supreme Court. And there was a case, I think it was 1930s. And it crossed the line where those people weren't able to be fired. We'll see. But what does Trump have to do? He's a bull in a china shop. He does what he wants and then try to rein him in. That is what he did in the first term. This is what he's doing in the second term. And the American public so far is very much behind him. If anything, the polls are growing stronger in his favor.
How's this playing out in the energy complex at the moment, Ira? Particularly, I guess, those ongoing developments, in particular geopolitically with Russia and Ukraine.
Remember Monday how we opened. When Israel killed 400 plus Palestinians, the first thing the oil did was take off almost $1 a barrel to the upside. Didn't lose the price. It went up. But then, for whatever reason, the market reverted, and by day's end, the market was down. So this is telling you the story, in my opinion. Number one, you're going to see world growth slow down. Do you need more energy in that? I don't think so. Number two, I don't know. Today there was a meeting between the big U.S. oil producers and the president at the White House. Very little news about that. They always say things went well, but we don't know what it was, and it wasn't covered by the press. So we will find out in time how that is going. But oil should have a rougher go here. What will make it rally from time to time is if the Houthis start firing all over, and let's assume that they throw their drones at Saudi Arabia, Qatar, into the Red Sea. We don't know. Trump has threatened not to be Biden. When he goes after him, he's going to make a statement that he's already told Iran, you stay in your own lane. If you come into my lane, you're going to feel the pressure. I don't think anybody wants to test this man. He's going to do what he said.
All right. So, Ira, back to where we began in terms of assets you're liking. Clearly, you're still liking gold then in this current environment.
Yeah, I do. I like it a lot because it's a safe haven play. When I look at the rest of the markets, they're difficult. Let's talk. Exceptionalism in the United States is changed. It changed radically. It changed very fast. It's no longer we're the stock market. Take a look at the DAX versus the US. You can see how it's gaining and we're losing. We're down for the year. Take a look at the dollar versus your currency in the basket of currencies. It's down. It's pushing into what? The 103 area, not the 110 area. This happens so fast. And it's hard to pick what you should do because of it, because trying to do that on this show before we get to April 2nd, where we know what the tariffs are, who's getting hit with what, and how they're going to roll out, that's fool's play. Be an in and out trader right now, not a position trader. And that doesn't mean you can't hold for a few days, but I think making longer term decisions is difficult till we know more. And isn't that what the Fed said?
Absolutely. Ira, thanks for joining us from Linn & Associates.
Thanks for having me.
Let's come back home, take a look at where we're likely to get going. Another positive start expected, certainly off the back of what we heard from the Fed, and that was reflected on what we saw on Wall Street overnight. So SPY futures up 2/3%. Lots to get across to more corporate results. We're going to hear from Brickworks and Soul Patts. Also getting a read on the latest job data from February as well. We'll get right across that in just a couple of minutes.